Good evening, ladies and gentlemen. This is Simon Brzezinski with the Market Daily Review. Today we're witnessing the continuation of the market fall, which started past Friday as a result of this coronavirus in China. We're seeing the news that the death toll is rising. We're seeing that virus spreading across the border. We're seeing some instances of virus even in the United States and the other countries. And this basically in addition to the overbought condition of the market and the other problems in world economy, such as confrontation between US and Iran, which could lead to a rise of the oil prices up to $150, and it could lead to a problem with the countries which are importers of oil, and all of it together combined, it leads to a downfall of the market. And we're witnessing the pre-market is almost 2%. Nasdaq is almost down 2% on pre-open. Many people thought we are due for the correction, and any small macroeconomic event, or even like the event like a virus, they could lead to this to the spark ignition. The spark ignites, it could ignite the downfall of the market, it could ignite the correction of up to 10%. And we can see that very simple, because people have made so much money on the growth stocks even from the beginning of the year, and right now they will be trying to fix their profits. They will try to sell their stocks, because that's what I'm gonna do today. I'm gonna sell my entire growth portfolio to capture whatever gain was left after the Friday's fall. And other than that, I'll be looking for the market to see if the market will try to rebound. I will look at the certain value companies, how they act. But right now, people are very scared. The investors are having uncertainty. They don't know what will be followed. Like all the other times before, we've seen that the market was finding buyers at the lower level, which were buying the stocks and not letting the market drop any further. But right now, we want to see those people. Either we see it or not. If we don't see, the market will continue its drop, and most likely people are willing to buy stocks at the much lower levels, because they don't want to buy it like 5%, like 10% lower. They wanted to buy like at least 30% lower than relative to where it's now. If you look at a certain Chinese names such as LK, those are the companies that, we know it's like a coffee shop, and we know if the virus is spreading, people are not going much to drink coffees in the public places. And that's why many Chinese companies, it's where the virus originated from, they are like on the downside. We're seeing LK has dropped from $51 to $37. It's almost 30%. We see the drop in such names like Momo, although it's just a social company like similar to Facebook. We see Momo is down. We see probably Alibaba is down. We see all the Chinese companies across the boards are down. Like for example, Alibaba is down 6%. Let's look how Apple is doing, because Apple is also not immune to the market move. We see Apple down 2.49%. That's probably over for Apple. And we've seen some signs of the market top with some semiconductors name, especially with the stock like Teradyne, which was up on earnings report. It was trading almost $80, now it's $72, and we probably see some further drop. And that's actually the situation that we have to take it really serious, because that's the situation that distinguishes winners from losers. It distinguishes the smart investors from the investors that I don't want to call them stupid, but unaware investors. What's going on right now? You either have to be a bull or a bear, because like many times I have said, and that's a saying on Wall Street when they say bulls make money, bears make money, and pigs get slaughtered. So right now you have to make your decision whether you want to still stay on the stocks and just wait until this correction is over, or you just sell the stocks trying to buy them like at the lower level, but not try to sell them, then buy them few points lower, then sell them again and with a loss, and try buying them even lower. But don't do it. Just wait until the smoke clears. Wait until the smoke clears and there is a clear signs of the bottom of the market, which probably we won't see it anytime soon. But other than that, if you just new to the market and want to take some action right now, I would recommend to buy some bear ETFs such as SPX short, which let you make money when S&P is falling. For example, today this ETF is up already 4.4%, which is nearly, it's like should be triple of what S&P futures are down. So that's what it is. It's happening in the market. We're in the midst of the correction. I just think it might be not, but we can see the market return today because they just there was some things on the news when they said that the certain patients, they just received the treatment at the hospital and they're already back home. So the seriousness of this virus is not that bad. So people are getting cured. It's not like too many deaths. So if you catch it at the right time, you can get cured. And just pay attention to some pharmaceutical companies, to some biotech names that are developing some antivirus medicine. Those companies may get some boost from that virus, and they might be actually doing well. Other than that, probably we'll see the earnings report. There are not too many earnings reports today, but right now I will not be buying. I will be looking to short the news. I will be looking to short the companies in the good news when they open with the gap up. I will be looking to short even the companies with the bad earnings, because market uncertainty will even increase their impact. So because we'll see probably the stocks going even lower. And right now it's a waiting time. It's a time to wait until, once again I said, until the smoke clears. It's a time to get the stocks at a good prices. So now it's a buyer's time. Before it was a seller's time. Now it's a buyer's time. Buyers are determining where they want to buy the stock, where they want market to stop falling, and they're like in charge right now. So that basically what I wanted to say, and it's not like the best time to get in the market right now. You can afford to wait a little, and then you will even get better prices. But right now, this is a time which reminds me a lot of like late 90s, even early 2000s. But overall, if you look at how the market reacts after some viruses were discovered, if you compare it to the viruses in the early 2000s, in the about the AIDS virus, when AIDS was discovered, markets normally reacting pretty bad like at the beginning, but after all, markets come back and we're seeing actually no impact after all. So right now we're seeing like the impact in its highest strength. We're seeing a lot of companies are trading down at pre-open, but I won't be surprised if I'll see some comeback at the market. But the only thing that makes me concerned that we are in an overbought condition, and this could just be a simple spark that will ignite the further sell-off. This was Simon Braginski with a daily market review, recommending actually to sell stocks right now to fix your profits. That's about all, and I see you on Wednesday. Bye.